Hi, I'm Shaziya, National Planning Director, Wunderman Thompson, India. We launched the Culture Muscle Finance study in December last year to identify important shifts when it comes to finance and the resulting shifts with implications for business. Sparked by the findings of the study, we decided to conduct a webinar with four very senior clients from the financial world that included HSBC, Mahindra, Manulife, HDFC, and State Bank of India. These leaders shared fresh insights based on their own real recent experiences, professional and personal. We hope you find the discussion helpful. Welcome to the Wunderman Thompson webinar here in Mumbai. I'm delighted and privileged to introduce who we will be doing the introspection with. All of them are dear clients. Ladies first, Shamali Basu, Senior Vice President and Head of Products and Marketing at HDFC Asset Management Company. And many of you all will know that HDFC has been the #1 brand in the Brandly WPP ranking of India. Ashutosh Bishnoi, founder, MD and CEO of Mahindra Manulife Investment, who brings with him a rich diversity of experience, especially an understanding of small town and rural India as well. Srinivas Jain, Executive Director and Chief of Strategy and Digital at SBI Mutual Fund. A historical tagline of the brand, "Banker to every Indian," says it all about the focus, impact, and scale of anything SBI does. And we would love to hear and get the learnings from there. And giving us a global banking perspective from what has been called for many years the world's local bank, Jaswinder Singh Sodhi, Head of Customer Propositions and Marketing at HSBC, who also brings a technology perspective from his geo experience in addition to banking. What was the genesis of this webinar? Over several hundred hours of field work and research, the strategy team noticed fundamental shifts in people's attitude towards financial matters, be it banking, investing, insurance, or even household finance. To add certainty to our belief, we commissioned a survey, the Culture Muscle Survey, across men and women, across small towns and metros, and across the spectrum of income classes. And we shared a battery of statements with them and asked them two questions. Is this happening, and does it affect your life? And that was the Culture Muscle score, revealing the biggest shifts. These statements were many, but they were broadly across 5 buckets of hypothesis and observations. They were technology, joint responsibility, investing, personalization, and knowledge. I might mention that this study was done before the lockdown, but a lot of the shifts revealed have only gotten intensified since then. So what's the purpose of the webinar? It is to encourage all of us to introspect about the customers we serve and how we can be more relevant to their needs and desires that have shifted. Sparked by the findings of the survey, but equally the panelists' own rich insights into the shifting attitudes towards finances, we invite you to take away from this brief conversation on a very large topic a few insights on how we can serve our customers better. So kicking off, on joint responsibility, what are the insights on the present and real experiences of fragmentation of financial decision-making and responsibility in the household? Shamali, your learnings on the space of multiple sources of income and multiple contributors.
So we are a young nation, right? And we have rising aspirations, and there is higher consumerism now than what there was before. And one single income certainly does not cater to the wish list that each family has generated now. It's not only in buying physical products, but now Indians also want to spend on experiences, which is why we are one of the highest in terms of global travel. Right. So there is certainly a need for having more contributors to the family kitty. Certain cultures in our country patronize it more than others. However, we coming from an investment field, we feel that investments per se itself can substitute a source of income. So a short story just to tell you that, because investments gives you passive income, right? And we need to generate a contributor to the family income when we are physically unable to work ourselves, right? Which is why as a finance industry, we all inculcate the habit of thrift and savings from a very early stage in life. Two short stories. One is a parable of a pipeline which I had read some years ago, wherein two farmers were asked to water a farm which was far away after their work. One farmer picks up 2 pails of water and goes every evening to water, and the other one spends or invests his time in digging a trench so that he can lay a pipeline. So the whole crux of this whole story is that you may not be able to work forever. You will age, you will retire, you would want to take a break. However, if you have investments, then it does cater to this changing requirement of having more contributors to the same family kitty. And you would have, instead of having maybe more family members contributing, you could also have your investments contributing when you physically cannot work.
Right.
And to draw an illustration from my own life, when I joined HDFC, I used to be on a not so great salary. And I used to go out and keep telling about starting an SIP and starting small investments. And I would come back and I had no folio of my own. And my colleague told me, "Ma'am, you keep preaching. Why don't you walk the talk?" And I actually told her that I don't have money. So she said, "Okay, fine." And she, at the end of the month, asked me to check my bank account. And I barely had some $1,000 or $1,500. So she says, "Okay, if I take this 10,000 or 1,500, is that okay with you?" I said, "Yeah, okay, start." So to the extent that she used to then start parking my money in ELSS so that I have no way of getting that money for the next 3 years. And that's how, Shaziya, I actually started a folio in HDFC. This is some 20 years ago. And as you start saving, it grows on you. And then you realize the importance of building a corpus. And then whatever is spare, instead of investing that, you make investment your priority. And you first want to invest and then spend whatever is left.
No, that's a beautiful story of just getting started. And Jaswinder, tell us about consumer attitudes now, which are more about conserving and investing and less about splurging.
See, these are unprecedented times. We are living in a situation where, the pandemic was unthought of. The proportions it reached, it was beyond imagination of most of us. As a result, what has happened is the people who are not used to facing uncertainty, are facing a lot, whether it is in terms of their employment, whether it is in terms of their financial future. And that's where I probably borrow from, what Shamli was saying, that joint households and double incomes have become far more relevant today, right? On top of that, I think what we have seen, this is probably a shift which is here to stay for some time, that Indian consumers have become more value conscious. They are more conscious about where they want to spend. They've been always value for money customers, but yeah. I think increasingly it's been more about, is it the right spend? Is it right for my family? Because I think the family thinking has sinked in very well during this pandemic. The planning for future, has taken center stage, because a lot many people have run out of the money which they had saved for their rainy days. Right, and hence the concept of rainy days, savings for periods like this have actually given a meaning to people. So earlier the whole industry, the job was to tell them about why saving for rainy days is important. I think somehow this situation, has created that awareness on its own. We see more and more millennials, even the younger generation, wanting to start investments early, which was not probably the case earlier. And even unlike China, I would say, where there has been, I would say, splurge in terms of they call it revenge shopping, or when the markets opened up a little bit. In India, we haven't seen that yet, and I think Indians are far more conscious of the fact that resources are limited and uncertainty is here to stay. So I think there is a fundamental shift happening, but Indian consumers are going to be value conscious. Its investments are going to take center stage, and I think long term planning, a lot of more people are starting to undertake now for their families.
Quite right. So as there is a more consciousness, Srini, how are individual queries being addressed given this rising consciousness, both internally and externally? What have been some of your learnings?
Just to start off, anecdotally, you talked about SBI being a banker to every Indian. We want to call ourselves asset managers to every Indian. In fact, our tagline is partner for life. So the context here is that we are a very old brand, both as an asset management company and also as a parent brand. And we have a responsibility of over 1 crore investors who have invested with us over years. In fact, more than 5 million customers, about 50 lakh people, actually come back to us every month on month through their SIP books, through their investments and others, right? So it's a very large, a responsibility that we have. So COVID was an interesting scenario. Nobody was ready for it, right? I mean, no book has ever said that this is the SOP you do when something like this happens, right? So it was very important for us to do two things. Of course, industry did a lot of work in the initial days. People like Ashutosh here, who's and others, very seniors who went on media, talked about. So we did see in the month of March a little bit of panic when the first lock-in happened. And that coincided with the dramatic market correction. And a lot had to be done at an industry level. A lot that was done at an industry level to, soothe the nerves of people. But what we did that internally is something I think it took a while to understand how to communicate during crisis like this. So that was a critical part. I think while at customer level we did a lot, internally we were actually doing much more, because when you have a feet on street which is 1,500 plus strong, or spread across, we impact about 14,000 pin codes across the country, which is roughly with about close to 150 branches. So it's a fairly large setup, and with our parent network, it's even larger. So it was responsible for our feet on street to actually be in alignment with what we were trying to do. And then we set out this agenda of having a single internal communication. We initially started this concept called Road to Recovery, but now we kind of call this more about unlocking the opportunity. So the idea was to actually communicate internally that COVID is a phenomenal opportunity for both existing and new customers or investors. How do you communicate that to your distribution community? How do you get more distributors actually on board during this point of time? So we built an internal narrative, and that narrative was kind of very standard across the country. There is so many webinars happening. We felt we were overdoing it in the initial days. Then we thought the better way to do it is actually build a website around it. We wouldn't call it a website, it was an internet site around it. So it was built so that all of these stories, all of this communication that we talked at a customer service level was actually being educated to every single sales team through this portal. So that was, I would say, very interesting stuff that we did. And I think we are now geared to do more such interesting stuff as we go along, right? But so that was the first learning, that you can't have like a one-size-fits-all communication. At the same time, you also need to ensure that everybody is in sync with what the organization is doing. And the larger the organization, the risk is even more bigger. So you have to be more structured in how you approach. So there was a lot of, March, April, May, you had all of these issues. But I think by mid-May, early June, we started seeing a lot of positive trends. And that's kind of shown in the business that we've raised. Thanks to all of that communication and the work. And of course, there is a huge brand equity SBI brings to the table during this kind of crisis scenario. We've been able to attract very big chunks of business in the market.
Great. There is one, there is an increasing sense of you need precise, accurate knowledge, and it's not about one size fits all. Related to joint responsibility, but focusing more on a vision for the future orientation of brands, there has been a shift about educating the girl child about financial matters. And Ashutosh, with that as sort of the central focus, what are your insights, especially from small town and rural India, about their priorities and what the girls and boys, the younger people are thinking about, and where the finance needs?
Yeah, thanks, Shaziya. I think I'd like to say that in terms of taking responsibility, it's our observation that over a period of time, in India particularly, and I guess in similar, less mature investment markets as India, where penetration of investments is really, really small, there is a lack of taking responsibility for your actions on part of the investors. They don't do it consciously, like, I will not be responsible for what I've done, but it comes out in many incidents that happen, even vis-a-vis banks, for example. The government has to step in and protect the depositor. The government has to step in and protect the investor in mutual funds, which is essentially to say that people are not substantially taking responsibility for their actions. It shows up in a lot of research. I'm sure all of us do research, and we find that people always need to talk to somebody. They always consult, formally, informally. It can be a distributor, it can be a family, it can be a wife or husband or whatever. That particular phenomena is what I have carried in my head from very early on as a financial marketer. But when I went into the rural landscape in India, I think I found a very new, interesting idea over there. The new, interesting idea was as follows, that the joint responsibility in rural India lies with the joint family. So the decision is never singular, and everybody has comfort in knowing that we did this together. And their ability to actually make decisions is far more smooth than a nuclear family, even of a very well-paid couple, two incomes. They find it more difficult to make those decisions because they may not have the time to consult, they don't have enough knowledge, and they're too busy with their professions. And therefore, there's a role for a third party. In rural India, third parties are generally called in for execution of trades. When I say trades, it doesn't mean necessarily investments. Even if it's a piece of land to be sold as an investment, generally the family sits around and mulls over it. But what is interesting to see now, what I've been seeing in the last 5 years that I've been directly associated with trying to sell the idea of a mutual fund in rural India, is that the needs are very different. We learned the investment theory and the wealth management theory and speak about childbirth, education, marriage, home building, retirement, right? That's a kind of a life cycle theory.
Yeah.
But in rural India, there are a few additional features to this which are very compelling. The number one is migration. Migration as a need to be funded has such an overbearing effect on the manner in which the household goes about providing for it. And of course, they don't have very planned responses except that some money is put away in some jewelry or gold or land or somewhere, and when the need arises for a next child of the family to go to the nearest city for education, and a second practically establishment has to be set up there, then they sell some investment and some arrangement is made. And it's not It's not unheard of for a single household in rural India to be supporting 3 or 4 of such establishments, in the different geographies. And I found very interesting in India is children today in rural India have ambitions that you and I will completely boggle at. They are not like any urban ambitions at all. Children in urban India, they all want to get a good education, they all want to get a great job. Some of them want to do startups. Yes, that's perhaps the limit of where they want to go. So I'll give you an example of work I did in Punjab, Haryana, and Western UP 5 years ago. And I found that children in school-going ages, the central theme running across boys and girls, particularly girls, in northern India was to get an Olympic gold for India. And I'm not talking about 1 or 2 or 5 or 10 homes, hundreds of homes. And that was well before, the time of, when that movie that Amir Khan played, Dangal, right? Well before that. It was before that. And then we looked around and say, well, there is infrastructure coming up to support for this. But how would it get paid for? How is the planning done to invest for this? If you go to South India, particularly in Tamil Nadu and parts of eastern Kerala, the number one ambition among girl child is to be a police officer, right? And when you start probing it, you realize it's coming from a perspective of women are done the wrong thing by in our society. So I will make sure that nobody messes with women. And it's endemic. I mean, school after school after school we went to, and there are so many girl children who wanted to be a police officer, not IAS, IPS. And they know what is to be done about it. We met, of course, a few who went one ladder ahead and said, I want to be a Supreme Court judge for the same reason. And of course, the legendary is the whole ambition syndrome in Andhra Pradesh, where if they could, they would export the whole state to, it will become the 52nd state of the United States if they can help it. It's so entrenched that we met schools, primary schools outside of a place called Eluru, which is a small port near Kakinada. And in this school, actually, claim to fame is if you put your child there, they will work on him or her from the age of 5 to make sure that he or she gets into an IIT. Right? And there are many such schools. So when you start migration based on that, then the other big event that is in a rural household needs planning for is a funeral. Now you and I will never think about it, right? But a funeral is such a big deal in a village. It's bigger than a family. It's bigger than a wedding. And you can't get a loan for this, and you just have to fund it. And this can cripple a medical incident, a big medical incident, or a funeral. It can completely wipe out the economics of even the wealthiest rural households. So we realize that there is a different way to approach this whole syndrome. It is not urban-like at all.
Yeah.
And the work that we do there then requires taking into account this kind of thinking, people with lumpy incomes, not enough information. Not surprisingly, they go back to traditional ways because that's how they've always met the problems. The traditional way is to buy a piece of land, invest in some jewelry and gold, and sell it when you can. So that's the kind of challenge we see a lot in rural India. But ambitions are really high up there.
No, that's a very refreshing perspective and a very real perspective of what's actually going on in terms of the needs and in terms of the dream. Shamali, is there something you would like to add on the topic of the girl child being financially educated?
I think it's extremely important. As I said, some cultures do not patronize contribution from a woman as liberally as some others. However, I think it's extremely important for a girl child to be educated on financial matters. And this I'm speaking with solely the experience I've had with this company in the last 20 years. Today, if you go to a financial planner, a good financial planner, he always sits with the wife and the husband and makes them do the financial planning together. Only then do they stick to the plan. Otherwise, left to the husband, they don't stick to the plan at all. Sorry, Ashutosh, and I can see Srini and Ashutosh smiling, but that's a fact. I'm sure they'll say yes to it. So even Warren Buffett, who's supposed to be a legendary investor, he says, I wish everyone should invest like a woman. There's this clear difference in the perspective of a woman when involved in financial planning and a man when involved in financial planning. And for a woman to do that, of course, there are some innate qualities which make her superior in taking decisions to stick around the path.
Yeah.
It is very important to be financially literate. Only then would she actually be able to participate in this, right? So the basic differences, I would say, I'm not talking of course, people in the industry like Srini and Jaspinder and Ashutosh, because we've been trained like that. But if you were to go to meet a normal layperson who is not in the finance industry, and if you were to talk about financial planning, the difference between a man's perspective and a woman's perspective is quite stark. So when a financial planner sits with them, the woman is interested in goals, right? So my child's education, or my retirement, or whatever it is. So thereby implying that they are more interested in the wealth creation and the ultimate achievement of that goal.
Yes.
They don't get bogged, or maybe they are not aware, which is a good thing actually, of what's happening in the markets every day. For a guy, mostly it's the excitement. Aaj market kaisi thi? Aaj gir gayi. Aaj nikal ke udhar dalte hain. So it's a lot of that adrenaline rush that that excites them. And talking of our own experience, I feel everyone would agree to it. The way a woman runs a family with a constrained budget is an extremely commendable job, and this they do across all social classes.
Yes,
from the very, very poor to the middle class. I think the rich need not do it as much, but that perspective of budgeting and managing within your means is a thing that we need to learn from the women folk. And therefore it's very important to educate a girl child as much as you educate a boy, because only then do they jointly take the responsibility of taking their family ahead. Ashutosh just mentioned that there are a whole lot of ambitions. Today, you aspire from whichever strata of society you are in. You want to better your life, right? And if there is a girl which can contribute and be a moral support to the family as well, because she understands the path is going to be rough, but yet if you stick to it, you will reach there. It adds a lot of gravity to this whole conversation, and does definitely aid in creating wealth for the family.
No, thank you. I really appreciate those perspectives. And I want to tell you, when we did the study, the girl child should be educated about financial matters was a statement tucked away somewhere. And we ourselves were surprised that it landed in the top 5. Even ahead of women should be financially savvy. So that to me itself is a signal that the same women that Shamli is speaking about are also realizing the intensity of passing it on earlier. And they're recognizing that it won't just happen. It needs to be planned and trained, for that to happen in terms of financial knowledge. Moving on to technology, and that's such a wide field again. But if we were to look at insights on what is getting done in terms of technology, what have we learned right now in the present, and what are the areas that we are still looking for fresh insights and new perspectives for the future when it comes to technology? Jaswinder, you've been saying that technology is the new normal, but there's also a give and take in terms of data and personalization. Tell us about the insights in that broad space.
Yeah, so I see when I say technology is a new normal, I think it's an understatement in today's age, because that's an underlying, I would say, base of every organization around which we are orienting ourselves. But having said that, there are some key trends, which our research throws, and some of them are quite obvious, but some of them have a deep, insightful meaning. Clearly, we see a world moving towards a mobile-based economy. I think there is a clear shift. While we've been talking about it for some time, but I think now it's fairly clear that mobile is going to be the centerpiece of every innovation, every app, every business. Gone are the days when we used to have a shop front and not have a mobile app. I think it's equally important today to have a mobile app, as good as opening up a shop in a mall or opening up a a high street, access of a branch. So I think it is important that we understand, acknowledge, and orient ourselves towards mobile, because that's a clearly defined customer preference. Second is, I think, importantly, people are getting more conscious about data, about privacy. What is it that they offer today to the brands? What is it they offer today to the organizations, who in turn have to come back and give them back so much of personalization? It is important, to understand that people are willing to trade off, or I would say give their data, provided they get better experiences, provided they get more personalized experiences, personalized offers. It's more about uh, how better you know me, and how technology can help you, why technology shouldn't help you. I think it's gone to that extent. It's become a new norm, saying that since you know me when you call me, why don't you also understand that what I need, and why don't we start the discussion at that point, rather than talking about a cold call. We are talking about artificial intelligence, we're talking about predictive selling. So all these things are lying at the background today. When Amazon gives you a choice of brands while shopping, it's predominantly tracking your behavior, tracking your preferences, and then giving you choices, right? But because since you have agreed to share such choices, you are getting that personalized offers. You're getting that things what you wanted to see as back. So I think this is an important give and take, what I was referring to, in the new normal, where I think it's cut across all segments. If you look at the younger generation, they are far more conscious. Even the older generation, I think they now know very well that Google is not free, or probably something is not free, where your information is available, but are you getting the responses? Are you getting the personalization? Are you getting the value back? For the data what you have given. I think that's something which I wanted to share.
And that's almost become an expectation now, in a way.
Absolutely.
Srinivas, you were talking earlier about technology unlocking opportunities. And would you like to share the WhatsApp story?
Yeah, thank you for that. A couple of years ago, I was doing this talk in one of the RBI's program, CAFRAL program, and I mentioned we should work towards bionic Salesforce, and that word was picked up from some research paper that I had read. And I tried to explain to people, saying it's not physical, it's not digital, but neither phygital, but it's more bionic, where digital is kind of embedded in everything that you do as a sales guy or a marketing guy. And who knew? I thought I was future gazing, and who knew in just 2 years COVID has kind of made that happen, and it's made that happen so well. There is a lot of learning that this COVID environment has put in. Suddenly, the 90-year-old is adopted to technology like nothing else, because really there is no alternative. So the idea of digital being omnipresent everywhere is now a given. What really was a problem was that people were using digital in an environment that they were comfortable with. And for us, we were sitting in another environment of apps and websites and everything else, which was very comfortable with the something 25 plus 45 kind of people who are, very good at what they do, but not everybody, not the rural India. So when WhatsApp opened up their business, setup last year, we started working with WhatsApp, and early this year, we introduced a WhatsApp bot for our customers. The initial thoughts was, let's just do servicing, and that will bring down my servicing capability at my contact center. And it did. Thousands of calls got reduced per day as we went along. Now, we soon realized that WhatsApp can become a business initiative, and we introduced a business bot on WhatsApp where you can actually do transaction and processing. But what happened just in the COVID is that when we were doing extremely well, most of our distributor came and said, hey, this is a fantastic service. Is there a way we can use it? Mind it, we are a B2B2C business. We don't do B2C. Large part of our business is B2B2C. And that kind of triggered our ability to customize the entire experience of distributor I used to have on our what we call as partner portal, which was meant for servicing our partners and their customers. we in a very record time, because WhatsApp is so easy. In a record time, we were able to come out with this partner WhatsApp. Now, as of yesterday, I see close to 20,000 partners of them actually use that to service their customers. So it's phenomenal. It's one thing to say I have 100,000 WhatsApp customers on my WhatsApp bot. It's another thing to say I have 20,000 partners, because they have another 100,000 behind them, each one of them. And that, I think, was a very important stuff. And today, in this environment where my branch was not accessible, my technology can only go up to one level where somebody still needs to have a conversation. WhatsApp bot was something phenomenal, and we were very impressed with what all was possible on that. Now we are moving to the third level of WhatsApp bot, which is basically so today it's more very less AI, and it's more like a next layer. We've worked with some fintech companies, and we're working on the next level of AI. And obviously, we don't want to keep it to a direct B2C relationship. We want to take everything that we do to our partners, because the ecosystem goes that way. And this was one of the most phenomenal experience. We continue to benefit from that, because one of the things that I've seen of late is customers have queries, and customers have query in their own language. Mutual fund is a very financially jargonish kind of an industry. And first thing that we did while developing our WhatsApp, very interesting stuff, is that we fed them with data of calls that come on the contact center, right? So the contact center, when people were calling, we were saying they talk in their own language. If I were to capture their own language point and put that in the WhatsApp bot, and the WhatsApp bot was told this is what that person was trying to be. So when a WhatsApp conversation was happening, we were able to understand that better. WhatsApp was not going and saying, I'm sorry, can you come back again? Can you rephrase your questions? Those conversations were limited. So this is a very interesting understanding that there are a lot of conversations that we happen. If you train technology to understand that conversation, your interactions will go up. Second big thing is that don't keep technology to yourself. Use that to betterment of, in our case, it's distribution. We are also seriously thinking of having an open API around it, saying more people can use it at a white labeled environment if they want to. In fact, we've announced at the beginning of last year something called InvestStack, which is an API for our distribution community, which everything that we do on technology is now available for them to customize in a white label environment for them. So these are some of the two very important stuff I felt it's a good idea to share. There's another thing that we did, which was more content, which I talked about, was about how do we go about living in this world with COVID, both for employees at one level, because employees are working from home. There is a lot that needs to be done. Every organization is doing it. But for us, it was more important that there is a single point connect for all of that to happen. The second thing was for our sales team, which I talked about in my previous stuff. And the last thing now we're working is for our distribution partner, where everything can be self-service, not from transaction point of view, query management point of view, storytelling point of view. So this is what we're working on.
So I think that keeping it personal and keeping it simple and keeping it conversational and being true to
and going to where the customers want, because we have 16 places where SBI funds management products are available. Our website, multiple apps, partner apps. But WhatsApp turned out to be the easiest thing to do, because that's where people are and that's where everybody is.
That's where people are. And I remember for friends and family, especially senior citizens, some months ago, I was getting calls on, Beti, now what is this WhatsApp?
WhatsApp.
Initially WhatsApp took some time, but now it's sort of become the normal in a way. Shamli, you've also had some learnings on financial apps, and if you can just headline a few for us.
Sure. So I know everyone will go on and say that technology and fintech has made life easy, and that's a fact. Today, of course, is a historic day when Google has decided to partner with India and spend about 10 billion over 5 to 7 years. So that aside, now what we have done is we have also tried to come up with an investor awareness app, largely an app in Hindi and English, so that we can take financial literacy in a form of a gamified manner, which would appeal to the millennials. And of course, what Srini said was right, because earlier the the 40s and 50s uncles, 60s, they would prefer to do a physical transaction just because there is no alternative left. They have migrated very successfully to the tech platform. So I want to bring in another aspect. I had not thought of it when we chatted earlier, but in this COVID, we've seen a whole lot of things happen. Not that it didn't happen earlier when markets were not so great, but execution, ease of transaction, it's a very good thing to do. But if you were to think of what happened when you had a TV and you did not have a remote, right? And you had 2 channels, and if you wanted to change, what would you do? Would you get up and change? You would invariably sit tight and say, okay, in 5 minutes of that ad, I will watch the same channel anyway. Today, if you see in your family, most families now don't watch television, most urban families. But even those who watch, they have a remote, and every time there is an ad break, they surf, right? And they move to another channel. As a result, invariably, all these soaps that you see, it's at a very critical moment that there is an ad break, and you invariably always mistime your entry back into that episode, and you miss that critical moment, right? When you don't know what has happened, whether the mother-in-law has slapped the daughter-in-law, or the husband has gone astray, or whatever, some historic drama that happens.
But sometimes the violence give you a clue. When the violence is very loud, you know that something's going to happen.
It's the camera angle that gives you the clue.
Yeah. So this whole story of having a television as an analogy is that with technology, you lose your focus also. Okay, I'm going to talk on the behavioral aspect. And we realized that during COVID especially, because there was so much of uncertainty, because whenever markets correct, investors react very differently from what their thought plan was when they had invested that particular money, right? And there is a study done of the World Federation of Exchanges. And this is across the world. They have done a study of some European countries, China, Japan. With the adoption of technology, the holding period of equities has gone down, right? So even though technology definitely brings multiple advantages, I'm not even going there because I think it's the way to go going forward. However, the behavioral aspect cannot be trained by tech as of now, because human behavior is not yet tech driven. And with ease of doing business, you tend to take rash decisions sometimes. If I were to tell you, okay, if you have to redeem your money, you have to go to an HDFC or an SBI or Mahindra mutual fund branch, you will say, let that be, I'm good with it.
Yeah.
Right? But because it's so easy on your phone, you will do it. And you won't even think of the other aspects. You just want to exit. So all I'm trying to say is that everything has a pro and a con. It's a very small aspect, but in investments, it becomes a very big thing.
Very big.
Because investing behavior, if there's somehow there has to be some way wherein we can crack that, where we can communicate to our investors proactively. Maybe someday AI can help us do that. Because with technology, your focus is definitely shorter term as compared to what it would have been without it. And given that, I would certainly yet invest in tech, but this is something which we have yet not been able to. So we've written a book on behavioral finance, small episodes, trying to curate Indian, examples. We are trying to talk to clients about it. However, we have yet not been able to bridge that. And I think the ease at which people can move out defeats that little purpose, of staying long-term and focus long-term in investments.
So there is an assimilative aspect about technology which still has to get figured out beyond the technology per se. Quite right.
If I can add, Shaziya, I think like every profession, financial, especially asset management business and mutual fund, is all about advisory at some level. I mean, you can't, like what Shamali said, I can't self-diagnose myself by going to Google and finding this is a solution to COVID. It's the same thing for asset management. Even if you're a doctor, you need somebody else to tell you that. And that's, I think, fundamentally, digital cannot solve for that.
Yes.
A rational person who has competency to help you can solve for that. And that, I think, is be true for every financial product. So I don't think, and I use this word called bionic simply because I don't think digital is end of everything. In that case, Google's will rule the world. I don't think they can rule the world. They will still need us. They will still need, creative people to help them, do what they do. And I agree with Shamali, but I think the end of this is all about how do you bring that human element before a decision is actually taken.
Yes,
so
that's right.
That I said, there is a very good example. There's a company called Robinhood in US, which actually does this customer. So they have this, maybe Shamali also can look up. They do this. In fact, they send out emails to their customers saying, we are not showcasing your short-term performances at all. And we don't want you to even look at it because you may take a decision around it, right? So there are some sciences now which are coming, which are making these digital platforms also, maybe as she said, AI will help that build that. But having said that, at least we are all human beings. We need somebody else in the between to go to and look for advice.
Yeah. And Ashutosh was sharing this as well, that technology plays a role definitely in speed and accuracy. But what is happening with people in terms of their decision making and their responsibility taking at the speed and accuracy demanded by technology, which is the question. And Ashutosh, what are your views on that?
Well, actually, not very different. I tend to agree with what Shamali said and what actually Sundar said earlier also, that, yes, technology is like electricity. We all will use more and more of it, right? It'll make life easy. It'll make things speedier, and accuracy is such an important part of our business, particularly, that is welcome to have, better technology in that space. When it comes to decision making, and I would actually tend to differ with some of you here, when it comes to decision making, human beings are the most irrational decision makers. That's our specialty. We are unlike any other animal in the world. We make the biggest decisions in our life on a completely random and irrational basis. To start with, we don't consume all the money we earn. We put it away for the future. That's an irrational act. That's assuming there's a future, right? So, therefore, the decision making, I believe, is difficult for technology to deal with, because it's so random and so irrational for each individual that, yes, I'm sure algorithms can be developed, and I can see some of them. We've used some of them. In fact, we've tried to test that. The reason why we're doing it is, in our business, and you know this, Shaziya, in India, beyond a certain point, there is just no distribution system. If I wanted an advisor, he's not there. And it's even more difficult in the current context for a new advisor to start a business, to say, I will advise. So therefore, we are constantly looking for solutions of this type, which may run on AI or robot or whatever they call them, where we can put our customers in front of that and they can probably use it for some self-help. But I think we are not there yet. But I feel confident we will be there. The need will drive us to be there. The alternative is to have a sales for a distributor force of 1 million or 2 million people or 3 million people. I somehow don't see that happening anytime soon. I think technology will find us that solution. And therefore, besides speed and accuracy, which it always does, it will bring this aspect of decision making faster than we are prepared for, I think. Of course, like Shamali said, and I think Srini said, that people may make a decision in a hurry and regret in leisure, because usage of technology has that impending need to decide now. But what I found interesting in a case of a company which was in South India, one of the early starters of the tech platform investing, is they found when an average customer who was about little below 30 years old came readily on to buy quickly because it was all possible to do fast. But when the size of portfolio grew to about 5 to 7 lakhs, which was a little high for that average size of customer, then they struggled for advice. And this company had to start looking at investing in an advisory sales force or advisory contact center, and they were struggling with how to keep this customer, because now that the portfolio size has become large, now advice becomes very important. When it was investing 10,000-20,000 rupees, I could do it very quickly. So I think there is a role which I think I can see a lot of work happening in dealing with the irrationalities of investors and capturing them in artificial intelligence. I'm sure the pandemic is going to spur, if anything, a search and a finding of that kind of a solution. And I'm hopeful it happens for the sake of my business, because we are committed to doing business in places where advice is no longer possible to reach, right? And it's difficult to reach. So I'm hoping this will happen faster than we think it could.
Actually, at a meta level, I hear this echoing everywhere, that the centerpiece is the human connection, and technology can make it travel, but the centerpiece is the human, and which actually segues into the closing of this discussion, which is that all of you have said in different ways when we have chatted that brands matter more in these times. They are an anchor, and people reach out and they want that connection and they want that meaning. Given these shifts that we very briefly discussed in financial attitudes, if we were to introspect and how can brands be more relevant to the customers they serve, I would request each of you to give a 1 or a 2-minute wrap up on how brands can be more relevant to the consumers they serve. And maybe we can start with Jaswinder.
Yeah. So I think you said it right. Brands have become more relevant in these times because what we have seen is customers move and find stability, in these turmoil times, in these times when they are not certain. They tend to find shelter in big brands. And that's where I think, HSBC has been in India for 160 years now. Not many people are aware of that. We were the first ones to start the first ATM in the country, right? So we have a huge bit of history, linked to India, and then over a period of time, we have a huge global footprint in terms of the number of countries we are in, the number of customers, the number of ethnicities we serve, etc., etc. So I think that is where somewhere the brand comes into play when the customer starts to make his choices. They tend to move towards safety. They tend to move towards apart from the returns, apart from the benefits, they tend to find stability. I think that's where the bigger brands come in. Another piece is that during these times, the customers want to hear from the brands. It is not that they want the brands to be silent during these times. It is very important for us to keep communicating with them. What we stand for, what we deliver as our promise. Even during these times, than when good times are around. So I think a lot of brands are doing some good work. We keep seeing the work which is happening. HSBC is doing quite some work for the COVID pandemic, supporting multiple institutions. How to fight this pandemic, and I think that's where the customer tend to relate to it. They want to see the act. They don't want to see lip service. They want to see the act. And opportunities like these provide a great way to connect with the customers, saying that what the brands actually stand for. And definitely, I think brands do provide that cover of stability, which is so much more important and relevant.
Right, quite right. Very true. Shamli, what are your thoughts?
Pretty much the same, but our business is built on trust, right? Because when a person is giving his hard-earned money to a fund manager to create wealth for him, asset management is built on trust, and banking is built on trust, because it's very difficult for a person to part with his money unless he knows it's safe in the other person's hands. So I think whenever there is any uncertainty, whenever there is external fear, I think people want to flock to a stable brand. And everyone has done that, because I think our industry is very well regulated, and we do care for our clients. And I think each company has stepped up and engaged more with their clients and spoken of that, that trust and the hand holding at this time, because you're not only stressed because of the uncertainty and the markets turning southward, but you're also worried about your future income. The certainty is just not there, and a whole lot of mental stresses are there. So I think all of us have stepped up to it. If you speak to any, at least a mutual fund advisor or a client, the whole industry has had like an overdose of webinars and client connect. And I think our brand tagline stands for it, Bharosa Apne Ko, because we feel trust is the key for any brand to survive when it comes to investments.
And trust is interesting because it's rational but also emotional.
Yes, absolutely. It takes time to build as well.
To earn it, yeah. Ashutosh, what are your thoughts on how brands can be more relevant?
So yeah, I totally agree with Shamli and with the Sundar. I think building trust is paramount, but in a way, if you think about it, in the business that we are, trust is a minimum must. Without that, you don't even have a starting point, right? That's one of the reasons why we could even had the courage to even start a fiduciary business like asset management from a brand like Mahindra, because that company and that brand is trusted not for financial reasons, for a whole bunch of other reasons. And therefore, it's important for us to go beyond building trust. The trust is there, and you have to not lose it. And there are so many occasions in our business that you could lose the trust, because the last interaction with your client will decide whether he continues to trust you or not.
True.
And that could be a bad contact center agent, right? So that's a very crucial piece to monitor all the time.
Yes.
But I think going beyond that is where we try to do, and I guess we stick with the knitting of the main mother brand, where we try to work for giving the communities we exist in a better life. To work with them to see that there is a better life. And in that sense, I can give you an example of my immediate parent company, which is Mahindra Finance. It's not a very well-known finance company because it mostly operates in about 350,000 villages. It doesn't operate so much in Bombay and Delhi. But guess what? They have like 7 million customers, each of whom have been a first-time entrepreneur. And those people had nobody to give them money for a loan to buy a tractor or a Bolero to start a business. Where Mahindra Finance walked in, made an assessment where no credit was possible to assess, trusted them, and now they're on their own, doing well. When you work with the purpose of lifting the community, as Anand fondly calls it, rise, then you build a very different kind of relationship which goes beyond trust. So I think we are in search of that paradigm for our business. It's difficult because there are 45 players. And how much can you differentiate in product, because you're not allowed to? But somewhere that is the driving force of differentiating a brand, lifting it from trust and putting it into meaningful existence for the society or the community around you. I think that's what drives our brand all the time.
That's incredible, and I'm reminded of a story I heard from a panel of people who are in microfinance, and they said the people who are not given finance to conventionally tend to have the highest returns, highest ratios of returning back. And when they understood that, they said because they loved the dignity of being treated formally, and they loved the fact that a big company was giving them that kind of treatment as to do a business deal with them. a loan for them was a business deal, and it meant so much to them that they would definitely, pay it back. So there is something powerful going on there. And Srinivas, what are your thoughts on, given all these shifts, and given the scale that which you're always sort of, it's your context, how can brands be more relevant to the needs and desires of people we serve?
So I keep saying this in the, I hope you can hear me. Yeah, I keep saying this in the context of my internal team and external team, saying as a brand, especially during these COVID days, there are 5 large principles that we need to stand for. One is that there is a need for what is called as protection or safety that your customer should look at this point of time. And I think both Shamali, Ashutosh, Jaswinder talked about it, because if you are that mother brand, if you are that stuff, so there is a natural way to get your customers attracted. So that's more on the marketing and business development side. But the actual real need in this time is the need for connection. I think if a brand actually does the right things in terms of connecting people, whether it's through partners, whether it's through bots or a very immersive activity digitally, it's very important for you to connect for both potential and existing customer base, directly or indirectly. The third real need is the need for value. During these times, there is immense discussion around whether we are adding value for what we do, and that needs to do. So while we run large funds, we also tend to be competitive in terms of how do we price our services. Management fee is one way to look at it. We have passive strategies that are very throwaway prices, which can add value to one level of customers. So there's a need for value. The fourth need, I think the need which is becoming more and more important in the current environment, is a need for honesty and sincerity. Because in a financial services, this need actually plays an important role. Today, even big brands have failed. And we've had crisis after crisis in the last few years, who all have had fancier brands, but they've not been sincere and ethical to what they do. And that, I think, is very critical. And one of the things that we do at SBI is we're a strong believer in ESG. We are a principal signatory to Sustainable Development Goals of United Nations. Not only are we doing stuff which are, so we have transparency code, we have all of that stuff. Most of our colleagues in the industry also have it, but we have to swear by it every day. When those decisions are being taken, we need to go through that and say, you know what, here is something this brand will never do. I don't think this makes sense to do business. That, in essence of what is called need for honesty, sincerity is important. And finally, I think this is becoming more a European stuff, but is now slowly coming to Indian and Americans. A need to do good for the ecosystem. Because if a brand continues to think that this is me and my relationship with my customer, a potential customer, and forget the entire ecosystem around it, and that actually is a bigger problem. So as you start becoming a more powerful, capable brands, and as you said, scale at which we do, I think there is a need for doing good. And I gave you the example of ESG. They gave you the example of Sustainable Development Goals. We put out something called as, every year we put out this report saying, as a company, what do we do? Responsible investing, how do we handle? So these things now have become very important as you start elevating yourself from one layer to next layer to next layer. It doesn't mean that everybody cannot do everything. Obviously not. For a startup, obviously, you're not looking at things which are not important. But as you mature as brand, as you have responsibility of millions and billions of customers' money, it's important for us to, I think these 5 principles are important.
Thank you. And I think do good really sums up many of the threads that each of you have brought out in different ways. And with that, I want to thank each of you for joining this discussion at a very busy time. And we want the audience to tune in to catch more interesting insights of this report. Until then, do download the report from wundermanthompson.com. Stay safe. Thank you, everybody.
Thank you so much.
Thank you. Thank you.
Thank you for setting aside your time and watching this webinar. I do hope you enjoyed it with a few key takeaways. Before we wrap up, I would like to give a shout out to a few people without whom this study and webinar would just not have been possible. Tarun Rai, Bindu Sethi, Kishore Taripalli, Pinaki Bhattacharya, Rinku Chaudhary, Rishabh Parekh, Saurabh, Rohini Sultana, Mark Truss, Amy Song, Sabha, Neeta Naik, and last but not the least, Design Sutra. Please do download the report from wundermanthompson.com. We have a few webinars lined up with more useful financial insights. Stay tuned for more.